Good morning. Live chat. We're going to go over here and open up YouTube, and I should be up there. Yes, I am. So we're going to turn on our Do Not Disturb. Let's go to, we're going to just do scans. I forgot to do scans. I think it was last week one day. I got up in the business and I forgot to do scans. Wow, there's going to be nothing. I mean, listen, Friday was such a green day and we've been having such green days. It's going to be hard to find stuff that's crossed up. Covered call, energy names. Morning, Evan. NXE. Arch. I have to find more energy names to add, and I have to do a crypto list. SRTY. DRV. DRV? 3 times bear on the real estate and the ultra short of the Russell. That's interesting. That's really interesting. Morning, Joe. Nothing on the Vanguard. Let's see. I don't think there's anything on spider sectors. No, I think most spider sectors are crossed up already. Mara, BITW, and RA Ring Central. Wow. I have to remember to put this one. This is my buddy's company. I need to get some insider information. I know they've been laying off a lot of people. Listen, I know too much about the company that I'm not going to invest in it, but it's kind of like when you work at a company, you know a ton of the inside stuff that's going on, and you just don't feel comfortable. Well, at least I never felt comfortable in investing in a company that I worked for. You got to remember, when I was a kid and stuff, Enron was part of the big thing. And if you're part of the millennial crew who doesn't know what Enron is, you can Google it. Essentially, here's the long story short. Bunch of people manipulated books, manipulated the energy market at the higher level, and a lot of these people, because the company was going so well, invested 100% of their retirement into Enron, and they lost everything. I mean, hold on. I don't know what the hell's going on between those two. Comcast might be, here's this. They're going to sell Hulu to Disney for a shit ton of money. The dying of the TV business is what's killing that. Dentsply, Strona? I've never heard of that company. That's in the NASDAQ 100. Let's look at S&P. So yeah, the only companies that I ever invested in morning, Mark, morning, Scott, was the cable Cox I invested in. And that was because it was an employee purchase of shares. Mags? Let's look at it. Let's go to strategy tester because I'm done here. We got some scans. Let's go to mags. You knew there was going to be one that came out like that. Round Hill Magnificent 7. Wow, this goes way back. It IPO'd right here. Is that a SPAC? No, $24. Let's see. Let's Google Matt. Let us see about mags. Round Hill Magnificent 7. I'm gonna put that in, Joe. Thank you for that one. Mags. Ada, you and D-Man like Sony. I can look at Sony for you. Mags just, let's see, it's holdings. Let's see what they hold. Total 132%. How do you get 132%? It holds 58%. It's got 58% treasury bills. That's why. Let's see what this one does. Exchange traded fund. The fund is co-managed by it. It invests in public equity markets. The fund invests directly and through derivatives in stocks of companies operating across information. Okay. The fund invests in growth and value stock. Listed Round Trail was formed. The investment seeks growth of capital. The fund is actively managed. Okay, so they're actively managing it. They've got 58% in treasury bills. Let's see about their expenses. .29. It's a bit expensive. Do they pay dividend? Doesn't pay a dividend. So let's see, liquidity, peers. They don't have any peers. Solid gain. I mean, look at that since inception. I just don't know. I mean, with that description, are they actually... Let's see. Mags ETF. Here's where it is. Highly liquid, precise exposure to Magnificent 7, low cost, tax and cost efficient structure. By seeking exposure to between 5 and 10 companies in the technology hardware. Oh, so they're not limiting it to just the Magnificent 7. They're going to manage it to... It's going to stay interesting. So you're paying a 0.2% premium to what they hold. Okay, let's do FAQ. What? quarterly rebalance. Expense 0.29 on the NASDAQ. Oh, you can trade options on it. That's an interesting one, Joe. I like that one. You know what? Let's do this. Let's chart this. And we will chart. We're going to select metrics and we're going to do performance, total return, update, and we're going to select metrics, mags. Oh, I don't want to select metrics. I want to select symbols. Apple, Amazon, Google, Microsoft, Meta, NVIDIA. I guess that's it. We won't do Tesla. We'll do those. Meta and NVIDIA are just killing it. And Mags is up 29%. So Mags is, let's do 6 months. I don't want to undo. You know what? Let's do 1 month. 1 month we'll be able, yeah. Mags is underperforming everything but Google. Google's the low one. Mags is morning, Eric. Can I share this chart? I guess I can. Let's see. Let's see if Seeking Alpha will screw up. Seeking Alpha and every other thing that I know screws up on Safari. I'm drinking coffee. So. Okay, let's see. We'll go into our Finder. Our downloads. Is it on desktop? Chart comparison. There we go. Okay. It's not a great. Here, let's do this. And I'm going to take that photo. Okay. And we're going to put this up there. Okay. Forms the one month Google. Okay. That's an interesting one. I like it. I think if it gets hype, this is the one I really like. I bought a bunch in my dad's retirement portfolio. XLG, it's the top 50. I mean, I just think that the top 50, is going to probably be a solid one, and you look at the expenses on this, it's 0.2. 0.2%. So XLG actually, I was thinking that it was. Let me see. Mag 0.29. 0.29 is not horrible for an actively managed one when you got XLG at 0.2. The bigger they are. I mean, this guy was right September 18th. This guy was 100% right on September. If we go back and we look at just year to date, you know what? Let's look at 6 month. 6 month, and you start in September. I mean, look at that. You know, it's downward in October. It really came down. But if you bought any time, you know, this year, pretty much you're up. XLG, you know, even August, you're at 36. You're kind of close to even. Okay, let's look at Sony. D-Man loves Sony, just so you know, Ada. D-Man loves Sony. It's a hold, strong buy hold. Let's look at Sony and FinViz. Let's look at their financials. They're making $6.7 billion. They have a $106 billion market cap. PE 15, forward PE 15, average target price 108. You're trading at 85. They had their earnings, so net income plunges 29% in Q2, raises full year outlook. If we go over here and we look at Sony, I'm going to be right back. I'm back. No, that's another guy. D-Man is a guy that works at Home Depot. He gives us all our insider information on Home Depot. But let's look at Sony stock. I mean, here's the earnings. Here's the thing, Ada. I don't know that I mean, is Sony going anywhere? No. But I've never been super excited about Sony. You pulled back to the 200-day. You've got declining revenues, declining price earnings per share. Nothing exciting to me in this one. You know, pre-COVID, you were trading at $71. What did they do to greatly enhance their services over pre-COVID? I don't know enough about them to say, hey, you know, it's a significantly stronger company than before COVID. But in my mind, you know, and you got to understand the biases. And I talk about this a lot. Anybody that's talking about stocks will absolutely talk their book. And I have my biases as well. I'm an Xbox guy. I'm not a PlayStation guy. I buy Apple headphones or Bose headphones. I don't buy Sony headphones. So I haven't owned anything Sony since the Sony Walkman. My parents owned 2 Sony TVs. Horrible customer service. Horrible television sets. But, you know, I'm biased like that. So understand that's kind of where I'm at. And I got scolded on the private Facebook group for yelling about Jim Cramer. That I shouldn't yell about Jim Cramer. So I went into a whole diatribe about, you know, there's a few things that I don't like about Jim Cramer. The first is that I think he was criminal in his behavior at Goldman Sachs, and he talks about it openly, that he manipulated markets. That's criminal. His screaming about the Fed knows nothing, these guys in Washington knows nothing, while it's touted as a great thing on CNBC, I think it's a horrible thing. He was screaming that these banks that had sold derivatives and had knowingly packaged up these horrible financial instruments that were basically giving people loan, and it was the housing crisis. Well, he said they know nothing and they shouldn't be put out of business. Yes, they should be. Yes, they should be. Yeah, you talk about bad on Wall Street. I talk about it all the time. Jamie Dimon, 100%, whether he knew what Epstein was up to or not, the rumors were out there. He can't say that he didn't know. Every other bank didn't want to do business with Epstein. Yeah, Scott, we're screwed. Cramer knows what he's talking about. He does when it comes to stocks. He just like anybody else in the stock market, though, you don't know what the market reaction is going to be. But here's the thing: if Mark Zuckerberg goes on Cramer's show and Cramer talks about the stock being an unbelievable stock, about how they're going to do this, they're going to do that, and they're going to do this. And then Facebook comes on and out with their earnings, and they're spending a shit ton on the metaverse. I mean, there's nothing Cramer can do, but the dude doesn't have to go on TV and cry, and he doesn't have to pump up the stock just because Mark Zuckerberg came on the show. Yes, it's a great product. Yes, you can say, I think you should buy. Yes, I think this is a solid thing, but you don't come on and cry. You say, listen, have your stop losses tight. We have to understand that if you're trading in this market, if you're investing in this market, Facebook's still at $300. Great buy, by the way, back then. Great buy before it hit let's look at the stock. Meta. Oh, hold on. Okay. There you go. You want to go under 2? There you go. Okay, everybody's under the damn bed now. So here, if we look at Meta, and I'll just go to let's go to monthly, because that's going to show you the drop of Meta. I mean, this was a 32%. It was opened at 314, and this was the month where they came on and Cramer cried. It opened at 314, traded up to 328, and it collapsed to 190. Well, if you're trading in the market, that's a horrible thing. But if you're investing in the market, add more. And that's what Cramer is bad at. He's just horrible at he says he teaches people, but I don't think he teaches people anything. And if you're like me and you bought at 320, I got out around, I think, 250 or so, 220, somewhere in that neighborhood. I got back in, and I didn't own it until 300. So, yeah, Christian. It started with a V. I forget the dude's name. Scott, don't listen to a podcast and think that the sky is falling at all. I mean, I don't listen to him. I have 2 podcasts that I mainly listen to, All In, and they had Jared Kushner. I haven't listened to that episode yet. I'm not a big Jared Kushner fan. And I do think that, by the way, everybody on that podcast is a grifter, is out of touch. I mean, they're all billionaires or multi-millionaires. I just don't think that they're in touch when they talk about, the private jets and the Four Seasons and stuff like that. But I do like it because it gives me a different perspective, but I take it with a grain of salt. And I listen to My First Millions, and I think those guys are a little out of touch as well. They think that starting things are so easy. I mean, Sam Farr made it public that when he sold his company a couple years ago, he came out with a $20 million check in his pocket. So after taxes, after fees, everything, he came out with $20 million. At 30, that's pretty much enough to live the rest of your life for most people. But, he admits it, and I have the same thing, is I don't have, $20 million in my bank account, but I logically have enough that most people would feel comfortable. I have a scarcity mindset. I just don't feel comfortable. So I tend to want more. Doesn't mean that I'm turning this podcast into a money-making machine. I don't I don't make enough for a normal person to live on this podcast. I am in the very, very small 5 figures on this podcast. And we're talking, closer to 10. Closer to 10. But it's getting there. I mean, last year I was making I've doubled the revenue of the podcast, but year over year. Hopefully it gets more, but I got enough money in the bank. I'm not looking at the podcast as making my my 20 million that I want. I'm looking at the portfolio that I have making me the 5, 10, 15 million, getting up into that range. But I probably won't feel comfortable going on air telling everybody how much I actually have. I'm slightly private in that because most people that know me know that I walk around in beaten up jackets. I don't buy new clothes very often. And part of the reason is I feel very uncomfortable talking about my personal finances. I don't feel uncomfortable talking about the stock market or anything of that sort, or investments, or telling people what I have in my portfolio. I just feel uncomfortable talking about stuff that, by the way, anybody else in on Boeing big? I am. Let's see. This one, D-Man said was my best paid newsletter yet. I think this is part of the free one. And then from down below here, the direction of the market. He thinks that one's a good one. But so if you want it, dailystockpick.substack.com. The free one is just as good. In my mind, the free ones, unless you're looking for, you're in love with me. Yeah. The paid newsletter, I think it provides some really good stuff for a lot of people. I think it provides, it's a look into my mindset, but it's not something that I'm going to say. There are two tools that I think you should have. The tools that you should have are TrendSpider, these charts with my algorithm and stuff. I think that's absolutely 100% in my mind a necessary tool. I think the second necessary tool is Seeking Alpha. And I don't think Seeking Alpha, for me, Seeking Alpha, the paid version, wasn't a necessity. But if I didn't have TrendSpider, the Seeking Alpha subscription would absolutely be a necessity. And if you want either, just go over to here to the link tree and you can do that. Yeah, Joe, and I think that's the case. I mean, I think I get categorized as wealthy when people know where I live and they see my car and they know that I don't work. And I think that's when I'm just walking around in Walmart shopping for groceries, I think people are basically holding out their hand going, oh, look at the homeless guy. Let's help him. And they're saying, oh, look at the homeless guy with banger highlights. Let's help him. Okay, let me organize this a little. I'm going to put this over here. I'm going to put your mags in the newsletter, though, Joe. I like it. I like this. I don't think it's horrible. I just think it's underperforming. Since inception, it's up 20%, but, since inception, I mean, shit. Thanks, Scott. I think there's enough to love. Sweet. Okay. I have just so you guys know, it's funny because I have Plume. And Plume, if you just Google Plume, it's an AI home Wi-Fi. And it's pods that you basically plug in. And they resell, they mostly resell. It's not something where they sell to consumers most of the time. But it's a software-enabled pods for, a whole home mesh Wi-Fi service. And I have a friend who's an executive at the company. And so I got on their beta users. And so when I log in and I ask for help, nobody knows, they're like, you don't have an account, you don't have service. And then what happens is a back end dude gets in, oh, you're VIP, blah, 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 you're beta. So, okay, let's look at it. I was having a problem where my pods, I'm going out of town. And when I would go out of town and I'd have a power outage and the network would connect back up, the pods wouldn't connect to the network. And so turns out there was a problem with the firmware. Since I'm on beta, they always throw me on the new firmware. And so the firmware was having a problem. They were like, oh my God, thank you for pointing this out. Nobody else pointed this out, and blah, blah, blah. I thought it was a situation with my thing. It took a few weeks. But when I don't pay for the service, I'm perfectly happy helping, and I'm not getting angry or anything. I've always got a backup. Okay. Let's go. I should take all this out. Let's see. Hold on. I'm going to look at... You guys will get a preview of the paid newsletter if you haven't paid. Let's see. I went over the QQQ direction, what I'm doing this week, TQQQ, Uber, Palantir, Microsoft, Cleveland Cliffs, NVIDIA, DraftKings, earnings this week. Yeah. I think it was a good newsletter. I just, Okay. I'm not going to touch on it. I'll just mention it. And I got the dogs in the cartoon. That was good. Okay, let's go back to the Qs. I'm starting to track the Qs a little bit more than I am Okay, let's go back up here. We're going to start back up at the top. Oh, what was the anecdote I was going to talk about this morning? Oh, I had my second bag of sugar pops yesterday on football day. I need to write this crap down. I write down my notes about the stocks, but I don't write down my notes about... let me pull this up so I don't get an ad. I don't think TrendSpider has their thing.
You're an aspiring price...
Okay. Jason's great. I'm going to pull that up. And we're going to pull this up. Okay, we'll start it. What the hell? Good morning. It's Monday, November 13th. We had a really good day on Friday. This is the heat map from FinViz, and you can see Microsoft 2.49, Apple 2.19, NVIDIA 2.95, Google 1.8, Amazon 2.1, Tesla. The Tesla Q, TSLQ, you probably should have been out of that one. And if we want to look at it, let's just take a look at it, because I made a big deal about on Thursday that call because it was down. But TSLQ, so you know, it touched the 9-day. So you should have been out on Friday. You absolutely should have been out on Friday. If you bought it at 36, 37 and you're trading it, should have been out on Friday. I mean, you can trade it in the 65-minute if you'd like. We've had quite a bit move on that one. Friday at 12:45 got you out with a 0.62%, 1% gain. Again, you don't want to short Tesla for too long. It's just a stock that's burned everybody. Yes, it's expensive, but Tesla overall, solid gains. In the algorithm, you make 68% over 24 months. 68% over 24 months. If you bought and held 24 months ago, you'd be down 37%. So the algorithm works on this one. You'd be in, buy at 201. Great buy. You're up at 214 right now. 7%? Somewhere in that neighborhood. 8%. In pre-market, you're trading at 216, up from 214. This button hook that's forming, the algorithm still hasn't gotten you out. Even though this death cross happened, the algorithm has not gotten you out. The MACD looks like it's maybe crossing down, but we're going to have a bad day for that one to cross down. But again, look at this heat map. Today, the markets are a little bit down. What I would expect is that we see some type of green movement through the day. I just have a feeling that for some reason people don't show up and buy on Monday morning, but in the afternoon we should see some type of activity. But after that huge green day, might be a little tough. Now, if you want to know about TrendSpider, Jason put out a fantastic video on Friday. Market structure basics right here. I'll include the link in the newsletter, but go and watch this. I mean, this shows you, I don't even do half the stuff that TrendSpider can do, but Jason shows you what TrendSpider can do to help your trading or even investing. And if you want to sign up, remember, use my link tree, linktr.ee/daily stock pick. It's right up here. The pricing on this one is fantastic. You can take it for a trial. It's $45 per month, which is 45% off. Again, it's what I like about this offer versus previous offers, you don't have to pay for the full year. You can start with just a monthly trial, and it's $45 per month. And it'll add up to $521. Make sure that your portfolio amount and the amount that you're trading makes sense for you to spend $521 a month. Or you can, if you don't like it, you can always stop it. Or say 6 months from now, you decide to go on a trip to Europe and you want to stop your subscription. You can do that. If you want to pay for the year, this is $382 per year. And this is, again, it's 60% off the regular price, and it's elite service. You really need elite. But if you want the best offer, $296 per year. And that's what's great about TrendSpider is I think, for $296, absolutely with my algorithm, again, in just Tesla, you make 68%. So again, make sure that your portfolio size is large enough to do it, but watch this video before you see it, because there's so much more in TrendSpider that you can do. And I'll be doing an episode with Jason where he's going to take us through. We might be looking at like the grade 8. We might be looking at some stocks. He's going to do an algorithm for you. He did an algorithm on another show that I watched that if you follow my Twitter, you would have seen. But it was a 1 hour Apple trade. And the thing over the last, few days, I mean, Apple has just been in this soaring. Look, 9% already, and we're down 0.33. I think you're going to fill this gap up at 191. But Apple has just been in this enormous stretch, and he did a 1 hour algorithm. He wrote an algorithm just, by the seat of his pants, and he said, okay, here's what we're seeing in this, and blah, blah, blah. Again, TrendSpider is an incredibly powerful tool. So if you want it, again, sign up. You guys know I can't trade without it. But let's take a look at the Qs, because I put out a paid newsletter this weekend, and D-Man said, and thank you, D-Man, by the way, sincerely for the super nice words. He said it was the best work that I've done in the analysis. One of the things that I wanted to point out is, here's what I think I pointed this out on Thursday. Maybe I put this in. It might have been Friday. I forget which newsletter, but it was one of the free ones. And I said, hey, it's forming this button hook. And you guys can see, think of a button hook. It's basically a half a button. It's a half a circle. And you can always see there's a button hook up top. There's a button hook down the bottom. If you just draw the bottom of these trend lines. Well, the algorithm won't time it to the bottom, but it will come close. And I saw this button hook forming. Well, the button hook has been broken with Friday's candle. And this morning's candle at 376, you're still slightly above that button hook. So, which means we could still go. Just be careful. This is a market that is overbought. The RSI, Relative Strength Indicator, if you don't know what that is, go and Google it right now. But the RSI is at 72. That means there are significantly more buyers than sellers, but sellers have to show up. People will start taking profits. That's just how the market works. But this gap up here to 382, I think that might get filled. Then we have other gaps that we fill. But if we go and we look at a weekly, and this is where you're really going to see the market breadth, is all-time high was 408 back here in December 2021. Right, the July high was 387. If you just draw right now and touch 3 points on a trend line, we're still in a downward trajectory. The MACD looks like, again, it's on a weekly, it's crossing up, but the RSI is at 60, close to getting to that overbought territory. Now, my algorithm, if you trade QQQ, it makes you 8.9% over 24 months. If you just bought and held the Qs for 24 months, you're down 4%. So again, the algorithm helps. In my world, I play TQQQ because it's triple levered ETF. So if you're trading, this is a great trading tool. It's still got confirmation. Am I holding on to this one? Absolutely. I will put my stop loss at this 200-day. I am down here at about 31, I think I bought. I tried to time it. I just got lucky, but the algorithm said, hey, buy it at 33. I will put my stop loss at about 40, I think. Right now in pre-market, it's at $40.29. I don't want to lose it. I don't want to set tight stop losses too tight, but I can trade this one all day. All day I can trade this one. And we're in a confirmation upward trend. So, okay, hold on one second. Okay, sorry about that. I have changed my life, by the way. I started drinking 3 glasses of water in the morning when I wake up, and it's really good. Skin is healthier. Overall, I think I'm healthier, but you do need to be by a bathroom. Okay, let's see. We're going to start recording. So TQQQ, I think is solid. You guys know if you're part of the newsletter, you saw even this weekend's newsletter, I included freebies with how much, all the charts, with how much gains we've made just over the past couple of weeks. You've got Apple, 9% gain. I did a short on YouTube. Apple, 9% gain. Boom. Amazon, 20% gain. Boom. Boeing, 10% and even higher. Cleveland Cliffs, 14%, Microsoft, 20%, Netflix, 30%, NVIDIA, 18%, Palantir, almost 40%, Qualcomm, 15%, and Uber, 22%. So I've gone over all of these charts, and you can get it free at the newsletter. The paywall really starts when I get into strategy. But if you wanted any of this, again, it's from the algorithm. And TQQQ was one that I said from the algorithm I would trade. So I went over in the paid newsletter things that I'm going to do this week with Uber, with things I'm going to do this week with Palantir, things I'm going to do with some of the other stocks that I bought. And if you want to follow my stock picks, you can go over to Savvy Trader. This is 100% free. They did change some things. And what's interesting, I think they let you follow one portfolio now. If you're a free person, the trading portfolio is up 8.39% in 30 days. The core portfolio is up 2% in 30 days. The core portfolio is not meant to be a trading portfolio. It's meant to give you an idea of the 35 stocks that I think are solid companies with solid earnings and solid management. And you can buy and you can see. Now, Disney's in here. I think Disney, probably is just a solid play long term. Occidental Petroleum is in here. I don't know if that's a long-term one. Devon, which has been a big loser. This one is down. But you can see I bought this at the June highs, at the absolute June highs. And if we just compare it to SPY, I'm beating SPY by 2.27%. SPY is up 0.55 since June. And the point of this is, hey, it's an equal weight portfolio. So it's 100 shares of each stock. And it's just, hey, if you pick good stocks, you can beat the S&P. You've just got to pick good stocks. Some people can't do it. I tend to have this ability to do stuff like this. I trade in high growth names too. But if you don't want that core portfolio, subscribe to the trading portfolio. And if we just compare it to SPY, the trading portfolio is up 1.37%. S&P is up 1.59%. Again, this is just a trading portfolio. So it's not something that hey, these names are fantastic for you to be in. This is just something that I look at, and if I do a trade, I'll put it in here. The core portfolio is a little bit different. So make sure you follow that stuff. But the main one is here. Let's talk about earnings. Earnings on Monday. I'll include this in the newsletter as well. These are notable earnings. Fisker, I have traded before. FSR. This is they're kind of like Apple of the electric car vehicle world. They don't have confirmation. They're going to continue to lose money. Higher for longer is going to hurt this one. I see their commercials all the time on when I stream services. I like their commercials. I like their car. The problem they have is the charging network right now. Until they go to the NACS, which is the Tesla charging network, this one's going to continue to lose money. If we go to a long term, I think this was a SPAC, if I'm not mistaken. Yeah, it was a SPAC back here. Just be careful overall of SPACs. You just want to be careful of SPACs. But $10 was the price. This one shot up all the way in March of 2021 to $31. You're not getting back to $31 if you buy this at $3. Now, $3.84. It's up 3.65%. Their earnings are coming up. I think it's after the bell post market today. There might be some hype on that one. Other earnings. Starbuck Carriers, SBLK. I have traded this one. This one, when the shipping wars were going on, this one acted crazy, absolutely crazy. We'll take a look at a long term. Ironically, the algorithm gets you in at $18.41. Now, understand, the algorithm on this one loses you money. That's because this is just a losing stock over this short term. You don't have confirmation on the long term. You're just over the 200-day. Pre-pandemic, this was an $11 stock. That's where I expect it to go back to. So understand, this was just hype. Shippers had a crazy, crazy good pricing power. They could do everything. You have Danos Corp, which is another shipper, and ZOM. Other earnings that you can look at right here. I know some people like to play earnings, so I'll put that in there. Now, earnings this week, if you want to take a look at earnings this week, one thing that I like about Webull, and if you don't have a broker, Webull's a great broker. I really, really like Webull. Oh, I can't show it to you. Let me see if I can pull this up. There we go. Webull is fantastic. I think Webull with their app just blows away every other broker in my mind with the app. This is where I trade TQQQ. I put $1,000 in there in January. I am up to $2,490. Last week, you remember I was at $2,300. Well, between Apple, IONQ, and TQQQ, and Google and Starbucks gains, I've gained some money. In fact, IONQ, I'm down about 3%. TQQQ, I'm up 20% on that one. So, but yeah, I really, really like Webull, and I'll put a link down below. But as far as earnings go, here is a Seeking Alpha report. These are the earnings, the big ones. You can see Walmart, Home Depot, JD.com, Target, TJX, Ross Stores, BJ's. I mean, it's retail week. You got Baba and Cisco, Applied Materials, even Rumble, which is a competitor to YouTube, Canoe, GOEV, which was a SPAC, XPeng, which is a Chinese automaker. But you'll see in this article tons of earnings plays. If you want this article, go sign up for the newsletter. I like some of the earnings plays this week, just not crazy about them. One that I may try and do, just understand, and I'll do with this in a little bit. Walmart is expensive, but let me look at, I'll talk about Walmart versus Target because I do think there's an interesting play there. But BABA reports. It looks like on November 15th, which is going to be Wednesday in the pre-market. This is overnight, so you probably have to own it. We just got out with a 1.78% gain in BABA. Now, my algorithm loses you 13% over 24 months. But buying and holding this asset loses you 50%. If you look, we are just in a downward trend, and we've put in capitulation here. You did get back in the October lows of last year. This one went down to $58, and you're at 82. You don't have confirmation. The 50-day on the long term has just started to move, but we all know if you're watching the markets, China's weak. This one might be worth a play to me, just because if you look at this, and I'm going to go to a monthly, an even longer one, this is trading below where it was during the pandemic. The pandemic, when the world was shut down, this was a $193 stock. This is way back to 2016. 2016 levels is where you're trading right now. They are a significantly better company. It's stronger company. Just the Chinese market is a little bit difficult. Understand that also, you are not buying the actual company in this. You are buying pieces of paper offshore. It is illegal for any foreign national to own Chinese stock. So what they did was in the Caribbean islands, they just set up these trusts, and you're buying a portion of that trust. China could say, if they hate America enough and they want to fight back with them, they may say, you know what, that BABA that's on the New York Stock Exchange, we're just not going to allow anybody to trade it. So pull it off. Yeah. And then BABA doesn't owe you a thing. Doesn't owe you a damn thing. So understand that's probably a trade, not necessarily a buy, but an investment, I should say. Walmart reports on 16th in pre-market. That's Thursday in the pre-market, so you're going to have to own it by Wednesday. Here's what I want to say. I mean, I don't think I'd buy Walmart. And the reason I wouldn't buy Walmart, let's go over to FinViz, because Walmart's forward PE is 23. Okay? If I want to own something with a forward PE of 23, I'm going to own Facebook at a forward PE of 18. I mean, that's cheaper than Walmart. I'm going to own a Google with a forward PE of 20. I mean, which one do I think is going to grow more, the stock? I just don't think that Walmart has it in it. You're hitting Walmart. I think you're hitting all-time highs, if I'm not mistaken. You're hitting 52-week highs at 166. So I don't think I'd do that. But one thing that I do think might offer an opportunity is Target. They report as well. This has no confirmation, and this would be 100% a bet to get back in. I took Target out of the core portfolio. Their CEO, horrible business strategy. I am seeing a ton of ads for them. I have not been in a Target store recently, so I don't know if their inventory levels are better, but their inventory levels suck. You go to Target and you can't get what you need. You go to Target, even grocery-wise, you can't get what you need. That's their problem. Their inventory system sucks. They are trying to take on Amazon. And what's interesting is I saw a Wall Street Journal story about how Amazon is providing same-day delivery in a lot of cities by having these regionalized small warehouses. Well, Target has their small warehouses in the stores that they have. So this should be an easy turnaround. In my mind, you have no confirmation. This would be a huge bet. But of the top three, you've got Walmart, Home Depot, and BABA. Home Depot, I'm not crazy about, just because rates are just so high. This is one where your mortgage rates are totally going to affect this. People aren't moving because they're in their houses at 3%. That's where I think you're going to get hurt in this. If we look at long term, the algorithm has you in at 282. You're trading right now at 291. If you look right here is the capitulation. I put this in way before this channel. I think that's where you're looking at getting into is 276 to 252. But you've broken that 200 day. So the 50 days moving downward. I just don't have a ton. But if I wanted to bet, I would bet on Target. I would bet on BABA. Now, I saw a Seeking Alpha story about Eli Lilly. Eli Lilly is in the core portfolio. It's expected to add $4.1 billion worth of sales from the new weight loss drug. What hit me was this paragraph. Other major drug makers developing weight loss drugs include Pfizer, AMZN. Last week, AstraZeneca inked a deal with $2 billion with China-based Ecogen to develop an oral once-a-day GLP-1 receptor. These are GLP drugs. Now, Pfizer and AMZN, Pfizer has just been killed. I would not put my money in Pfizer. PFE is the symbol. I would not put my money in there. I do have a small position in Pfizer. I think it's like $5,000, $6,000 that I've had for years. Should have gotten out around 40. You're trading at 29. This is just a broken stock. It is associated with COVID. Their COVID revenues are significantly down. They currently have like Travis Kelce and other people on ads to get your COVID shot. It's not working. So if they do come out with a weight loss drug, I just don't expect that one to look 67 cents per share, 17 cents per share. Your earnings are gone from this one. So AMZN is the one that I've said, hey, I like AMZN. If they come out with a weight loss drug, I think this one's positive. The healthcare sector has just been beaten down. We'll talk about XLF here in a little bit, but the healthcare sector has just been beaten down. AMZN I like. Now 269. I don't know if it's a crazy good price. You can look at AMZN right here. Their forward PE is 13. Their PE is 19. Lilly, on the other hand, which I've said, hey, it's in the core portfolio. Their PE is 110 with a forward PE of 48. So they're going to need to grow significantly. That's why I like AMZN a little bit more. If they get some kind of weight loss drug out there, I think you start to see this one move towards that Lilly thing. But again, that paragraph is what caught my eye in this story is other major drug makers developing weight loss drugs. The weight loss drug, GLP-1, is the new AI. And I think that's crazy good. Now, there was a question about shorting AMC or, short squeezes, I think, last week. Is AMC going to go into short squeeze? You never know. But here's the most shorted stocks in the S&P in the last month. Exxon, Tesla, Apple, Charter, Broadcom, Rivian, U.S. Bancorp, Snap, Ford, Airbnb. So 3 most shorted names in the mid cap: SOFI, American Airlines, Lucid. Great article here if you want to try and time a short squeeze. You can't time it, but I do think it's an opportunity. Now, TrendSpider on their Twitter. If you're not following their Twitter, you're really missing out. But they said, don't fall asleep on the banks. XLF, clear bull flag breakout plus swing high in the VWAP. VWAP is volume weighted average price, reclaimed yesterday with some room to run. So if we go to XLF, now you guys know XLF, I have Bank of America. I own Morgan Stanley. I own Wells Fargo. Look at this algorithm, 32.27 right here. You're at 33.92 right now. Just a few days afterwards, you got a gap up here from 33 to 33.34 to 33.47. I'd be careful of this 200 day. If you're going to trade XLF, I would say buy it when it's under that 200 day. Right now in pre-market, you're down 0.35. You're at 33.79, which is under that 200 day. Just understand, if you're going to buy it right now, that RSI is incredibly overbought. And this 32 to 33, I just, I don't think it's worth a buy right now, but I think it is something to keep an eye on. In my mind, I think you want Bank of America. I think you want to trade this one. Long term, I like this one to go back above 30. You don't have confirmation. It's just trending down. The algorithm got you in at 26.13. You rejected right off that 200-day. I own Morgan Stanley, so we can talk about that. I think, yeah, this is actually, let me go down here. Because Jay Steinbeck from Spotify, looking at increasing my position in Morgan Stanley, looks like it's been setting up for a rebound. Wanted to get your thoughts. Let's take a look at it. I mean, Morgan Stanley here at 70 was a buy. You're at 75. Great trade because you got it up here to about almost 77, so you almost had a 10%. The problem that I have with Morgan Stanley right now is its lower highs. And so you can see here back in July, 95. You can see here, 88. You can see here the high was 80. You can see here the high was 77. So you're constantly setting lower highs. Your 200-day is negative. Your 50-day is negative. Your 9-day is turned around. Your 21-day is turned around. You don't have confirmation over that 9-day. With the RSI at 55 and the MACD kind of pointing downward, I would tend to wait on this one, and I wouldn't time it. I would wait for some type of long-term kind of trend to move you in the upward direction. Right now, you still have on the weekly, you still have the 200-day moving up. You have the 9-day moving down, 21-day moving down, the 50-day moving down. So I'd probably wait on this one. If you want to buy for the long term, I don't think 75 is horrible. I absolutely don't think that $75 for this bank is a horrible, horrible play. If we go over here and we look at Morgan Stanley, you can see the PE is 13, forward PE of 11. Year to date, you're down 11%. You got a 4.34% dividend. So if you're looking just to put your money into a solid bank, that's not going, you're not going down to zero, but we don't know what's going on with commercial lending. We don't know what's going on with some of the smaller banks. We don't know what could break with higher interest rates for longer. That's where you're getting into the danger with the financials. So with a clean bull flag, kind of, maybe hold off on this one. But AMD, TrendSpider put in an AMD. And by the way, that bull flag was on a weekly. So it's long-term, kind of looking a little bit good. Short-term, maybe just wait a little bit. AMD going for the first MACD cross-up since November of last year. Now, this one is, let's see what time frame they've got on this one. This one, I think it's weekly chart. So it's going for the first MACD cross-up, AMD, on a weekly. You guys know I own AMD. I think at about 104, 105 is my average price. You're at 118 right now. The algorithm got you in at $98. And so if you're at 118, fantastic trade. You still have all-time, confirmation up here. But your RSI is at 72. Your MACD is up there. If we go to the weekly, the MACD could be crossing up. See how it's crossing up? I don't know that it's great to buy here at 118. They've had their earnings. The catalysts are out. The only catalyst for this one will be if NVIDIA comes out with crazy good earnings. But AMD, solid play. I like that one. Semis could get a bounce up. Let's talk about Boeing. One of the bounce up that I said, hey, buy Boeing under 200. Absolutely. You should have bought Boeing under 200. We're now at 204. And you're starting, the market's going to open. This is looking even more bullish when the market opens. I think you're going to see a pop here. Right now, you're looking at 10% gains just off the algorithm. And if you bought here at 186, you're still, the only reason you bought at 186 was the earnings were better than expected. And it buys at the open. So the open price of this candle after earnings was 186. You're still solid. You're at 204 right now. I think it's looking bullish. I think you're looking at probably claiming this 200-day. Your 50-day is moving positive. Your 9 days moving positive. You have confirmation. The only problem is in the short term, your RSI is at 66. It's a little bit overbought. But long term, I don't think if you're investing in Boeing long term, I don't think 203, 204 is a crazy price. I think at some point today you may get it under 200. It might be that volatile. But I think for a long term, you're fine. Okay, hold on one second. nobody's out there. Don't worry. I don't want to hear the barking. Chris, Boeing's a solid play. I think long term, you're fine. I mean, China's going to order. There's just rumors. This article is just may end the Boeing freeze. And look, it's up 4%. Imagine what happens when they actually buy it. So I think you're solid. Okay, let me go back into the podcast. Okay, and again, I'll point out that article is just may end. China may buy these. Imagine what happens when it actually buys them. But Boeing has been a solid play. One that hasn't been a solid play, but looks like it might be bouncing a little today, is Boyle. Boyle is up 5% today, 53.20 it's trading at. This one, if we go back here to FinViz and you go down and look, natural gas is getting a little pump. Oil's getting a little pump. Natural gas is up 4%. Gold is down. The Dow, everything's down here in pre-market, but Boyle does seem to have it. You don't have confirmation in the algorithm yet. So the RSI, it's just a little bit oversold at 38. The MACD looks like it's going to cross up, hasn't crossed up yet. So again, this is a trade. This is a decaying asset, so be absolutely careful in this one. Now, one that Joe brought up, if you're interested in the Magnificent Seven, that's Apple, Microsoft, Alphabet, Amazon, Meta, NVIDIA, and Tesla. If you're interested in this, there's an ETF, MAGS. This is the Magnificent Seven. It's an interesting play. I did do a chart on this one, and I will pull up the chart will be in the newsletter. The only problem that I see with this is that it actually underperforms all of the Magnificent Seven except Alphabet. So in my mind, I think, again, if you want to just say you're going to spend $1,000, in my mind, I think you're better off just splitting it up between these seven and just by, the seven. Tesla, in my mind, is the one that might perform a little bit harsh just because, and this is the danger of Tesla is you look at the PE and then nobody cares about the PE. The options drive this thing up. Year to date, you're up 74%. The average target price is $239. You're trading at $214 right now. So I do think that Tesla, in my mind, I've always been scared of Tesla, but it's bitten me in the ass every time. Tesla has been one to just buy and hold. I said, here, button hook is sort of forming. We're kind of putting in a capitulation here. So if we capitulate, and again, if you watch that TrendSpider video, you'll see Jason talks about just capitulation. But if we capitulate right here at about 215 or so, I think that's putting in the mark for the 50-day to start to turn positive. Right now, I probably wouldn't buy Tesla. I probably wouldn't buy a lot of the big Magnificent Seven. But Mags is a great opportunity for you to go in there. If you want to see anything about Mags, sign up free for a Seeking Alpha subscription. You can use my link tree. Just sign up. You don't have to get the paid version, but understand what you're getting into and understand what you're holding. Remember, this is holding 58% Treasury bills. So it's holding 58% Treasury bills. And then the rest of the 58, this is a actively managed ETF. So understand what you're getting into, understand the performance, research it on Seeking Alpha. I really like that. Kaveh. I hope I'm saying that. Kava. Maybe it's Kaveh. I've been told by some respectable professionals that Cloudflare is a good purchase right now for the long term. Was wondering what your thoughts are. Cloudflare, their symbol is NET, and I tend to agree that it's a good long-term buy. If we were looking long-term and you look at a weekly, this one got all the way up to $211. It's been killed all the way down. And part of the reason it's been killed all the way down is I think they just haven't, their cost, income, minus $202 million. They're not making money. Higher for longer will kill them. Year to date, they're up 39%. Average target price, $65. They're trading at $63. 52-week high is $76. So I don't know that it's oh my God, it's a crazy good one. You can see November 12th, a bull market is coming. 2 monster growth stocks to buy with $100 right now. Part of growth is you want to buy these companies that aren't making money that will start to make money. Here's what scares me about Cloudflare. Look at all these people selling, and it's not small sales. I mean, you're talking $1 million from a director. You're talking $659,000 from another director, and it's all at this $60 price. Look at these guys back in September at 63, $3 million, or I'm sorry, $6 million because he did two of them. So he's selling $6 million. That's the CEO at 63 selling $6 million worth. Here he is again. That's $9 million worth. I mean, if we just go back, let's just take a look at how much he sold. Look at how much he's selling. I mean, that's $3 million at a pop. At a pop, he's selling this. And so I'd be a little bit scared, Cave, about that one. Is it getting me out of it? Probably not if you're in it. I mean, again, other people understand this. It's not crazy expensive. I shouldn't say that. The forward P is 119. So it is crazy expensive. The price of sales is 17. So I think it could still come down. I was reading that as 19 before, but it's 119. Hoofa. I didn't think it was crazy expensive, but now that I see it's 119, yeah, it's crazy. Earnings per share this year, up 239%. That's where you're going to get continued growth. If they continue to perform next year, they're expected to go up 20%. That's going to continue to just drive the stock down. If they can find some growth, great. But if they can't, higher for longer is going to kill this stock. From a short term, from an algorithm perspective, you lose 65% on this. With the algorithm, you lose 68.9% if you bought and held it for 2 years. So it's not crazy to think that, hey, you could invest in this and make a lot of money. I think there's better places in the market for you to look. K Spears wants me to look at ARKK. And sorry, by the way, there's a lot of social requests this week or today in particular because for some reason Spotify just all of a sudden posted all your social requests all at once on Friday or something. Here's ARKK. I'm not a huge fan of the ARCs, and I'll tell you why. I think they're targeted by big firms. So what I mean is she publishes her buys and sells at the end of every night. So there are significant ETFs that short this. There are also significant big funds that basically trade on her buys and sells. So her making her buys and sells public, I think hurts you in holding this ETF. But I think trading the ETF absolutely 100% works. Now, my algorithm loses you 43% on this, but you lose 66%. So what I'd tell you with my algorithm is make sure that the buys are solid buys, like this one at 35. I think the next candle you couldn't buy in. I think that gap up here where you went from 35 to 37, I think that was an absolute buy. I think that, this next gap from 38 to 39, you've started to come back on it. So you're seeing trade this one on that one. Now, if we look at the 65-minute algo on ARKK, which is interesting, you make 2.8%. If you use the 65-minute algo. Now you make 3% if you buy and held. Again, the 65-minute algo tests about 1,000 candles. It goes back 8 months. So your average win on the 65-minute algo is 2.12%. Your average win on the 4-hour algo is 9.89%. So just understand, the whole reason that ARCs, my favorite ARC fund, by the way, if you were to buy and hold one, is just ARKW. I just like that one. That one's less targeted from an ownership perspective. I think it owns better companies. If you want to know what they own, you can go over to Seeking Alpha and look at what they own, what's in the portfolio of ARKW and ARKK. I think ARKW, owns more GBTC and Bitcoin, if I'm not mistaken. But ARKK, I don't think it's a horrible thing. I just think you have better opportunities. Alex wants me to look at Kroger. Kroger is one. This is an interesting one. I think they use Instacart. Walmart has their own delivery service, so I tend to like Walmart more than I like Kroger. The margins on groceries are just really, really bad. So Kroger, it has you out in the algorithm. You've got your ex-dividend date coming up. Your earnings are coming out November 29th. From a algorithm perspective, it loses you 7%. Buying and holding makes you 3%. Doesn't have enough volatility for the algorithm to say, oh, okay, we're going to make some money. If you look at a long term of this one, if we go to a weekly and you look at it, you're just coming back to the 200-day. I mean, you're going to come down to 41. In my mind, I just don't think there's anything specifically exciting about Kroger. If we look at KR and FinViz, you can see the forward PE is 19. Here's the thing that I know personally, and again, this is just personally. I go to Walmart for groceries. Walmart has picked up their grocery business significantly. One bell ringer says Kroger has delivery. So they must have their own delivery service. But the cost of that is probably, again, they have to scale that. So it's a little bit, in my mind, I have a friend that has a food delivery business, and they use the DoorDash API. So maybe that's what Kroger did, is use the DoorDash API. But Instacart, Instacart, that they want to get into these types of businesses, so they're offering a little bit better. I don't know enough about the business. Target price $50. You're trading at 43. 52-week high is $50. You're down 12% from that. You're close to the 52-week lows. I don't see any buys giving me confidence that these guys think that this is the bottom. I just don't see any reason to get into that. I think there's better opportunities in the market. But if you shop at Kroger and you love Kroger and you think Kroger is going to make a huge, huge business, I think that's again, if you use it. I don't use it. I go to Walmart. WCred said, hey, there's something dinging throughout your podcast. I think that's the subscribe. I use a green screen for the video, and I put the subscribe graphic down at the bottom. And I grabbed it from a website as part of a green screen thing that was free. I think that's what you're hearing, WCred, because I do have Do Not Disturb on. And I'll try and put it in less. I think I put it in every 20 minutes or so. So it does ding every now and then. So it is what it is. D-Man from the newsletter. Soon as sellers step in, buyers step up. Looks bullish next week. Tickers he's looking at are PPG and MAS. Let's look at PPG. This is PPG Industries. D-Man's been pretty good on some of the calls that he's had. PPG, maybe a rebound. 123. Earnings, they've already had their earnings. There's no catalyst involved. You've got your confirmation. 129. PPG, I don't know what they do. Let's see what PPG does. PPG Industries, specialty chemical. They make market cap of $30 billion, income of $1.42 billion. They are 15% below their 52-week high of 152. They are near their 52-week low, which was 120. So they're 7% above that at 129. Looks pretty good. I mean, FinViz has a nice little chart here that shows the bounce up. I would be careful because I do see the 50 days moving lower, 200 days moving lower. The 9 and the 21 are moving positive, and you do have a cross up on the 50. So maybe the 50-day might start turning positive. Maybe a pretty good play. Let's look at MAS. MAS is Masco. Let's see, MAS. What do they do? Are they a chemical company too? Building products and materials. You can tell D-Man works at Home Depot. 12% off its 52-week high. Yeah, I think you've missed the bounce on this one, but I do like the 50-day. That 50 days, kind of like I just talked about on PPG, the 50 days moving positive. You're going to use this 200-day as kind of resistance. The one thing I would tell you to worry about is the RSI. And the MACD is super, super higher at 1.57 on the oscillator. That one, if it gets a cross down, you're going to get what I call that button hook on this one, because that's going to automatically just start bringing it down with algorithms and big traders doing that. So I think you're going to start to move that way. So I'd be a little bit careful, but I appreciate your comments on that one on the newsletter. Now, Willie from Instagram Instagram, he says, there were large insider XOM buys last week. Can you touch on this one this week? Have a great Sunday. XOM, just take a look at XOM. I mean, there were huge buys. I say anytime this one gets close to 100, start adding. You've got $140 price target, which is the most recent from Bernstein. I don't think that's out of touch. You had November 6th, you had a super buy. Jeffrey Ubben bought $26 million worth. You can see this dude starts adding right about 100. You can see right here, July 31st, he bought $48 million. He bought it at 106. He's down on that one. $48 million or $20 million at 106. He bought $26 million at 105. He bought a bunch back here at 15. He bought a bunch at 27. That's AES. Let's look at XOM. XOM, he bought $84 million worth back on August 4th of last year, where it was trading at $88. August 4th of last year is where he bought $84 million worth of XOM. As EAV2. But solid. I mean, the insider buy, you can't ignore that $26 million buy. The dude is thinking that, hey, XOM has a solid track record. I think when they integrate, they just announced that they're getting into lithium. If we go over here and we look at Exxon, they announced there's some news stories about them getting into lithium in Arkansas. So they're going to start that. Strong buy on the Wall Street. Wall Street analysts have it a buy. Seeking Alpha analysts has a buy. The quant has it as a hold, the 3.46. That, in my mind, anytime you get close to 100, you start adding to this. I'm seeing this 9-day start to turn around. You did just have a death cross of the 50-day crossing the 200. This is around the time when they had their earnings. They made $2.27 per share. Their ex-dividend date is coming up November 14th. So, Willie, I hold this. I hold a lot of this. I definitely have well over a couple $100,000 worth of Exxon. I just kind of sit in it. I don't look at it. I bought it, a lot of it way back in during the pandemic. If we go back on the weekly, you can see back here the pandemic, pre-pandemic. This was a $71 stock, and you're moving down. You got all the way down to 34. I think I bought in July of this year. I think I bought it like 40. 40 was my average price. I've been adding to it. I haven't been trimming. I like the dividend. Do I think it's getting to 140? I think you get to 140 before you get back to 77. But I don't know the price of oil. Again, from a strong, you had this golden cross here March 14th. You were trading in the 70s when you had a golden cross on the weekly. You're now at 140, almost 104. I think 120 is a solid resistance level. So if you buy at 104, I think you get to 120 when oil starts to go up. I just think that again, oil is a solid play. They're buying Pioneer Natural Resources. And as Exxon stock goes down, you can actually buy Pioneer and get 2 shares of 2.336, I think, of Exxon when that deal is done. And you get a nice dividend here. So I think that's like a 4 or 5% dividend. Let's see, PXD. They announced a special dividend. It's a 5.56. So I like Exxon. I like PXD. I own both of them. And I like energy stocks. I just think that energy is manipulated from international people. So be careful where you go. But I don't think that any kind of anything that's horrible. Anything around 100 for Exxon is horrible. I think you'll be fine. Okay, hold on one second. Boy. Oh, you're welcome, Anthony. Okay, let me get back in. I got to do scans now. Okay. Scans. So scans. We've been in this bull market, like I talked about with the green stuff, green shoots on Friday. We've been in this bull market, so it's hard to find stuff that's actually, not bullish or just getting to bullish. Next Gen Energy, NXE. This is part of our energy trade. We've traded this one. This one has been it's in an upward trend. You can see it's kind of bouncing all over the place. But it's near its highs. I don't know that I'd necessarily get into this one. Do your research. Understand that it's just a name that looked bullish in a list that I have. Arch is coal. This one, bullish trend. The RSI is kind of in no man's land here at 46. But kind of, still in that positive trend. The 50 days moving negative. I'd wait for this one a little bit to maybe have one more or two more bullish candles for you to do it. Their ex-dividend date is coming up on November 29th, and I do think they have a pretty good dividend, if I'm not mistaken. 7.34%. So solid. It's up 10% year to date. The average target price is 179. You're at 147. So your 175 is your 52-week high. These guys just sell a ton of coal to China. So if you're okay with that, then get into that one. Now there's a couple here that I think are interesting. This is SRTY. This is a levered ETF. It's ultra pro, so it's 3 times levered, short of the Russell 2000. The Russell 2000 has not performed as well as the rest of the stock market. But here you can see September 27th, we had $42. Now, what's ironic is that $42, you got all the way up to 60 here. The algorithm got you out with a 14% gain right here, but you could have gotten out way up here. Once you passed October, the Russell 2000 just soared, to be honest. And so this triple levered ETF went down. Now, ironically, you've got confirmation, and it's 53.48. Do I think that the Russell 2000 is going to crash? I don't track small caps large enough, but it is interesting that one in particular, a triple leveraged short ETF, got the cross up. Similarly, real estate bear, DRV. This is a triple levered ETF against the real estate market. This one got a cross up at 57.49. Might just be too oversold. The RSI is at 46. You're coming off levels of November 3rd. It was at 28. So it might just be, coming up from the 53 to 59. I mean, this has been a great play if you got in at 53. At 57, maybe wait for it to get to the, don't wait to buy it. But if you wanted to buy it, my upside, I'd probably sell if it hit that 50 day at 62. So I don't think you're looking at a huge, again, I think there's too much bullish narrative in the market for something like a DRV or an SRTY to really take off. Now, Mara, we talk about Mara. They had their earnings last week. They pumped it up. The algorithm got you out with a 19.83% gain. It gets you back in today at $9.61. You're trading at $8.99. If you listen to me for a while, you'll know I say buy Mara under 10, sell it over 10. Once they start making money, I mean, they were losing 13 cents per share. They just went into a tailspin. They announced that they lost 9 cents per share. I didn't look at the earnings particularly, but if you're losing money in this market and with Bitcoin continuing to go up, I think this one at 961 and you get it under 9, I think you could easily just get it back up to 10. So it's up to 9 right now. But Mara crossed up. Meanwhile, in ETF of Bitwise, BITW, this is the 10 crypto index. Look at this one. I mean, this just got another bullish cross up. But this one, the algorithm gets you in at $12, okay? You're at $20 right now, BITW. The hype on the Bitcoin ETF is crazy. GBTC, I mean, we can go and look at GBTC. They had a cross up a while ago. The algo has been solid on this one. Here, you lose 41% over the last 2 years on GBTC. 41%. The algorithm, if you get it, there's 29 positions. You win 24% of the time. But your average win is 28%. That's not including this run, where October 2nd, you got in at 18. You're at 29. 29 right now. And when I talked about it last week, GBTC is trading at a 13% discount to Bitcoin. So when they transition to a spot ETF for Bitcoin rather than a futures ETF, boom, there's your 13% gain. So BITW is one. GBTC continues. It's a little bit overbought right now, but be careful. Ring Central, my buddy works for Ring Central. They got to cross up. The only reason I'm bringing it up is because my buddy works for them. I'm not bullish on this one. The 50 days moving down, the 200 days moving down. The only reason I bring it up is because my buddy works for them. One that I might be interested in, and it's just because of the recent move, is Comcast. Now, the problem is Charter and Comcast and everybody else, they're losing the video service. So they're losing their bread and butter. But the cost on that is significantly increasing. So losing subs, they're not too worried about it. Comcast in particular is going to streaming, and they've moved to Peacock. They also are selling their Hulu stake to Disney. Now, Disney mistakenly, I think, forecast this one and said, oh, we want to buy the Hulu stake. And they said it in public. Iger said it in public. That just tells me that Comcast can pretty much name the price. And Disney probably will pay for it. So, the 200-day here is at 43. Understand you just had a death cross. You just had the 50-day moving down. And the 50-day continues to move down. But your RSI is at 47. Is 41 a good price for this one? In my mind, I think you wait for it to cross 40. I don't know that it will. But I've worked for the cable companies. Wall Street constantly devalues the cable companies. These guys, the problem that Comcast has and other people have is that wireless service is going to come and take over your home internet. So wired service is going to be needed. There's a lot of streaming that's going on. I think with football, in particular Amazon, I think with the amount of people that are streaming football on Thursdays, I think I read somewhere that 41% of the internet's bandwidth in the U.S. is taken up and occupied just by football on Thursday nights. So it's an interesting one. And finally, the S&P, of the NASDAQ, Fastenal, FAST, you've got confirmation, but it's crossing up again. I mean, it's just continuing the bullish run. So you got a secondary up here. That just tells me, hey, it's going to continue to run. I think you're at all-time highs on this one, so be careful. Your all-time highs are back here at 64. So it might move again. You don't really have a catalyst. Your earnings are already gone. Your ex-dividend date is gone, so just be careful. So there you go. I will be back tomorrow. Remember, TrendSpider's sale. I will be doing I think it's tomorrow, I'm going to be doing an episode of the podcast with Jason. I won't be live doing it. We're going to tape it. But the sale it's the Black Friday sale. It's going on here. You can go just to my link tree if you want it. But you're getting 1 year of free futures with yearly or prepaid plans. So the Elite is what you want. This middle level is absolutely the sweet spot here, as low as $24.70 per month. So if you click on that, you're going to go over here to the Linktree, linktr.ee/daily stock pick. Click on that link. Then you'll get in my program. What you're going to do after that is once you sign up, you email me. The email is right here, dailystockpick3@gmail.com. You email me and I send you back a newsletter. You hit the ground running with strategies that you can import and use. You guys see the strategies that I use, the algorithms. So if you don't want TrendSpider and your portfolio is not huge, or you're just kind of a ancillary trader, but you really want investments, I think the Seeking Alpha platform at $189, I think that makes sense for you. I use the premium version a lot more than I thought I would, to be honest with you. I thought I was more of a trader, and the investor, I thought, I could use this, but I actually like a lot of what the premium version of Seeking Alpha gives you. It gives you the quant ratings. You're able to import your portfolio, and you can see the core portfolio here. We've got a health score on the core portfolio. It will tell you which particular stocks maybe you should look at trimming. That's what I really like. Watch out. You have one stock at risk of performing badly. So your dividend score is 4. 4 out of 5. What do analysts think? Analysts think mine is 3.57%. My portfolio is in the top 12%, I think. 29, top 29% of all portfolios. So there's others in there. I mean, understand that's just a score by somebody else, but that's the core portfolio. And so I think Seeking Alpha is a solid one. The newsletter. It has a paid version, but you can sign up for free. I basically put all the links that I talk about and everything in the newsletter. It's dailystockpick.substack.com, or you can go to the link tree and sign up. But the paid newsletter is on the weekends, and it goes over a little bit more about my thinking. It does have a free 7-day trial, I believe, and you get access to all the archived articles as well. If you're paying more than $25 a month for your phone service, Visible. Just, it's $25 a month. This is the service that I have for $25. I've never had a problem. Not one time have I had a problem. It runs on the Verizon network. So say you have 1 or 2 phone lines on Verizon and you're paying $50, $60 per line per month. Get Visible, $25. It's the same service. And if you want the absolute premium service, it's $35 a month. I mean, again, this is, you can't beat this. So I would say go get Visible. If you're buying a Tesla, use this link. If you want AT&T fiber at your house, I have 1 gig service at my house. Love AT&T. Love the service. It's a 1 gig service referral. So you get a billing discount. I get a billing discount if you sign up. So any other things are on the link tree. I will be back tomorrow. I will talk to you guys later. Bye. At Crane Company for me. Beach Tree Climber. What's Crane Company? Let's say. CR. I know nothing about them. Market cap 5.71. They're not on an index. Forward P is a little bit high for specialty industrial. 21. That's a huge growth. You're at all-time highs, 102. I don't know if you're at all-time. We'll take a look at all-time highs. But you're definitely at 52-week highs. Your target price is 111, so you're only like 10% away from that one. Initiated, no price point. Initiated, buy at 118. Here's the top article, why it soared this week. Let's see. Boom, 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 boom. Splitting off some of its tech as a separate company. This week, the market got an update on how it's doing. As of Friday, shares of Crane were at 10% after an optimistic forecast. Crane is a manufacturer of valves, pumps, and other highly for aerospace defense. In April, the company separated its asset tracking and monitoring business as Crane NXT, allowing management to focus on its resources. The company today has aerospace. The company performed well. Crane delivered strong results. Could Crane shares fly higher? It's an uncertain environment when manufacturing companies were strong and backlog indicates. The company also remains on the hunt for acquisitions. Crane is unlikely to perform like a tech stock anytime soon, but the company offers a solid trajectory for a steady growth for foreseeable future. It pays a dividend that is currently yielding 0.8, so it sucks. Nothing gets me excited about it. I mean, it said in the article it's not going to trade like a tech stock. CEO sold at 76, $2 million. He just needed a pool in the backyard. To 5.71%, $5.71 billion market cap. No real short interest. Let's look at the chart. So the chart, you have confirmation above there. Got you in at 93, so you've had a solid gain since earnings, since it got you in at 93. You traded down here, low of 82 before their earnings. I'd be a little bit careful that this is getting too much hype in that that's $1.10 per share and then $1.03 per share. The RSI is high. I think it's overbought right now. In my mind, I think you stay away from this one. You're filling the gap. You're going to fill the gap up to 106. All you're doing is filling that gap. Notice, this is the weekly. So the gap started here with their earnings back in April 2023, so just April of this year. Look, they went from $2.13 per share to $1.25 to $1.10 to $1.03. I mean, I think they're just filling the gap. They'll probably get back to $2.13. They'll probably get back to $2 per share. You can see the earnings per share is just driving that price up from 2021. They made $1 per share. They don't have anything there. $1.66, $1.86. So B-Tree, for me, I think there's better opportunities. But I'm just a douche on the internet. So, but I do think there's other opportunities out there. That would be my take on it. Okay, let me go grab my laptop. Let's close that down, and we're going to take that. Okay, oh, stop. I don't want to play that. Take that, and take that, and take that, and share, airdrop. Oh, look at this. OBS has an update to version 30. Where'd OBS go? There it is. Okay. Hit that thumbs up button. I forgot to say that. And my dumbass forgot to turn on monetization. I keep forgetting to do that. Receiving, sending. Okay, are you almost done? B-Tree Climber, I hope that helped. Sent. Okay, I gotta go put this together, respond to emails. I will talk to you guys tomorrow. Tomorrow I'll be on. I may do a quick show tomorrow because I got